Good morning, traders. It is 7:39 a.m. on Thursday, the 3rd of November, 2022. I was intending to start at 7, lost 9 minutes here with some upload issues. I'm at home this morning. I'm doing a pre-market summary sheet because once again, for the last week. Hopefully, my wife has training at the same time as the Trader Bite, and so I'm in charge of taking the kids to school this morning. So I'm doing this early just to make sure I get to you before the day starts. This is episode number 2350. I want to remind you that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. Can I get a mic check, please, just to make sure you're hearing me loud and clear? This morning, the market posture across the board is mild risk off, mild risk off. The market is hawkish after the outlook by the market is risk off after a hawkish outlook by the Fed yesterday. The Fed, I intended to actually do a little bit of a synopsis of what I learned about the Fed and what they were saying yesterday and why it was so significant. There's definitely a lot to digest. I believe it was Macro Alf who did a really excellent rundown of what that is. It basically, the Fed essentially was saying that the pace of increases, the FOMC will take into account the cumulative tightening of monetary policy, the lags with which monetary policy affects economic activity, inflation, and financial development. So it's basically setting us up to tell us that they are going to determine the pace of increases uh, by looking at the overall economic picture. Stocks shot up on that, but as soon as the press conference started, uh, Jeremy came out saying that the incoming data since our last meeting suggested the terminal rate of the Fed funds will be higher than previously expected, which was a 4.63%, and we will stay the course until the job is done. Stocks, the equity market started to tumble right there. That's what caused the initial push. The second bomb was what's far more important now is for how long rates will remain and will stay the course until the job is done. So in other words, the Fed is probably going to push the Fed funds rate above the core PCE rate of 5%. And Powell has indicated that this will happen, and the market was shocked by it. But here we are. So the market tumbled, and the overall picture, the knockout punch was that the risk management's key here. If we were to over tighten, we could use our tools to support the economy later on, but if we fail to tighten enough, inflation would become entrenched, and that would be a much bigger problem. This is the real knockout punch to the market, because what this is saying is the Fed is favoring over tightening and just pushing the economy into a recession more so than it favors not tightening enough and having inflation continue to be entrenched. This is really significant for the market, that not only will they increase rates to higher, probably higher to the terminal rate becoming probably higher than what the market had expected. So that's punch number one. Punch number two, they're saying that once they get there, they may have to keep them there for longer than they originally anticipated and what the market expects. He's preparing the market for that eventuality. And then, of course, the knockout punch is we would rather go overboard and go for longer and really choke the flow of money, and then take actions to stimulate the economy rather than be quickly responsive to what the data shows and taper off as soon as possible. That's basically where we're at. With that, the S&P dropped from 3907. I asked you to watch out for 3904 if it gets above 3900. Again, I'm still on in the camp of 3900, not likely to hold, and it didn't. It went to 3907. And then the expectation is we would go to 38.20 to 38.15, if you recall yesterday, and the S&P dropped that way. So that's the key element. That's the key risk event that we're paying attention to. The BOE this morning raised 75 basis points. The EU unemployment rate was better than expected, which kind of gives, even though the ECB doesn't have a dual mandate, it gives the ECB the ability to continue to constrain rates as well. So those are additional hawkish outlooks. You have the calendar in front of you. I'm not going to go through it. The S&P is the multi-distribution profile. Why is this saying zeros? Let's look at the chart. Let's refresh this chart that it pulls the data from. The S&P has relatively heavier than normal volume for this time of day. So by the time it opens, it's likely to be at or above 370,000, which is the edge of what we would consider normal. The inventory is 41% short, and the range is 50.75, giving us a pretty good range to work with this morning, most likely with the point of control shifting significantly lower at 37.64. The point of control has been shifting higher and higher and higher and higher, and now we've basically had a reversal. So bulls turn into bears probably today. You can see who's announcing this morning. Not going to go through that. What I'm going to dive into is the charts. Here's what things look like. Now, if you recall, I talked about this yesterday, opening higher than 3,900 and finishing below the balance. This is quite bearish behavior here. And then when we opened yesterday, we opened in balance, and I talked about this being a very likely non-directional, non-tradable day until the FOMC comes in. And if you were here yesterday, you saw the chart. You saw the chart that showed that if we push higher, we're likely looking for 39.15. If we push lower, we're looking for 38.15, 38.20 from where we are. The market opened and kind of drifted downwards. But overall, what we've done is put in a pretty nice rounded top here, and the expectation is we are likely to test this middle range as we had discussed before. So now we're looking for 36.90. The 36.90 zone is the key test area down here. We're trading at 37.30 currently. So pretty methodical, despite the FOMC, pretty methodical trade. We spent a lot of time yesterday above in that 38.40, 38.50 range, and then fell off. And look at how we closed. Let's pull these in, because now these are actually part of a micro composite profile. Oops. No. Okay. These are part of a micro composite profile, so let's pull those in to integrate them into this bigger profile that we've moved away from. So now this becomes our key reference in terms of balance. This is from the third week of October through yesterday. We are down here, so you could see what's above us, and what's above us is this 38.44, 38.50, where we spent most of our session yesterday, and we are well below that. And now we're looking at heading into the 13 and the 37.13 and the 36.90 below. So we are in between these. We've moved below this profile, below the upper balance, these two sections, and we're moving back into this fat area, and that gives us a range all the way down to 36.90 to find balance. So this is key to see how it tests, and does it turn at 36.90 or not. Our price is going to move low enough for buyers to step in and take us back up through the 3800 and then again to 38.54, 38.50. That's basically how this is setting up. If we don't hold the 37.15-ish area, the 36.90 area, then we are basically going to retest, very, very likely to retest the next balance zone, which is down at 36.06, something like that. Call it 36.10. That will be down here. That's how the progression is. You know, we're here. We are likely to have a responsive buying spree, move into 37.50, test the 36.90, come back in, and then over the next few sessions, most likely use that as resistance and start moving down into the 36.10 down here. And then maybe at that point, prices reflect earnings and they reflect the current situation as we go into the end of the year trade. Okay? So that's key. Here's what things look like in detail. Don't mind these bands. These bands are our stock zones. Let's make them a little more faint here. Don't like them standing out so much. And you can see the overnight session so far, pretty good range. 2 distributions. The LIS, we have an LIS in the overnight session, a really important level to watch this morning, the 37.56 to 60 this morning is really important to watch. So what we want to see is when we, the inventory is quite short, not hugely short, but any response up here is very likely to tangle with the 50. That's a mid-century figure. It's also our over-under stock zone at Convergent. And then 37.56.60. If as long as we stay below the 37.56.60 area, we're very likely to continue to explore lower into, again, the 15 and then the 690 below in the S&P. This is how things are configured this morning. Yes, I'm being quite bearish, but I'm just going with the fact that we are currently one-time framing down, and we have pushed quite a ways and tested that 3,900 level and have rejected it. So this is the overall picture. So you can see we've done quite a decent amount of work up here. We ended up reversing, taking this big rally day up here on Friday. There's your Monday, or I think Monday. There's your Tuesday. There's your Monday. There's your Tuesday, above and below Monday. And now lower high multi-distribution with a huge kurtosis in the middle with a terribly weak low. I could have told you yesterday afternoon that the low is not likely to stand, especially with settlement at the low. We did not successfully migrate the point of control to the low, which kind of raises a little bit of eyebrows there. But overall, the market is likely to continue lower. I mean, this news is really not happy news for the market. Real quick, I want to invite you to take a moment to vote. The link is in the live chat. It's also in the description of the video. This is a polling for charity, the polling for charity challenge. Go to eclear.me/event-voting and vote. This is what the vote sheet looks like. You click on what is your vote. You click on what is your vote and you get the sheet, and essentially we're putting in the settlement prices and you're voting on whether or not we close, we settle today above or below settlement. We'll put those trades at prices that meet our trading plan, which means we have to have at least a 1R possibility, and we're looking for 2R profits for these, and then we bank those profits, and at the end of the year we'll send that money to charity. The account was funded by EdgeClear. You can find out more about EdgeClear by going to edgeclear.com. The account was funded with $10,000. It's a little bit down because we lost on all 5 products on Tuesday, but it's been holding pretty steady, and it's been very interesting trading these event contracts. I highly recommend you take a look at those. You can get more information on that by going to itrade.events. So please take a moment to vote. and we'll put the position on before the open. Here's what I'm expecting for today. So let's look at today.
Shell's LNG trading division recorded
Let's
a
squish
loss
this a
of
little
$1
bit.
billion in the Q3, according to
Okay, so what are we looking for today? Today, the primary scenario.
We've already seen earnings from the name, but no, they don't generally disclose.
Primary scenario, here we are near lows. I expect some responsive buying. I expect this thing to push for a gap to settle. At best, it might really have a problem here at the 55 to 60 range, as I discussed, but at best it might get to 68.75, gap to settle, fall out of range, and then I'm looking for the 36.90 as the key price. This is the post FOMC day, so 36.90 is the next equilibrium price, and that's where we're looking for us to go, the 36.90 250 naked point of control right there. That's the primary scenario. The secondary scenario for this morning is one where prices are already cheap. Now we have broken some key levels from the top. This over underline we've broken through. It might push lower by a little bit, push back up into settlement, and hold steady at the low end of the range here to for a relief rally after yesterday's sell-off. I don't expect it to push into all of the single prints and so on from yesterday. We have single prints in the S&P up till 3808 quarter. Really not looking for that to be repaired already. I expect today to kind of flow to the downside. That would be scenario 2. I'm looking for scenario 2 to just come back into where we closed yesterday, discounting the BOE announcement and some of the stuff that happened overnight, and to become responsive, but really settle in right around the magnet area and this lower distribution from yesterday. Okay, I'll leave you with that. Good luck. Don't forget to vote, please. Make sure you vote. Go to eclear.me/event-voting. We need 100 votes or more to put on the positions, and I will report back and let you know what the positions are. I recommend you follow EdgeClear on Twitter. You can find it at twitter.com/RealEdgeClear to get the results later this afternoon. Good luck, and I'll catch you tomorrow morning. Take care.